is, how does the seller arrive at the list price, and is it negotiable?
Okay. I really appreciate being here to talk about REOs because I know a lot of people are afraid of them. They're not quite as complicated as people with the perception is. Pricing is done by way of, I do evaluation, on a BPO, which is a broker's price opinions. They also have outside agents do a second opinion BPO, and they'll also hire an appraiser. And through the three values and in all of these reports, we all have to report conditions of the market, we have to give them comparables, and so they are very detailed. The seller will look at that, and with that they'll look at the as-is price versus a repaired price, and then the seller will come up with a price. They are negotiable. Usually right off, the seller will pretty much stick to those prices. The whole pricing is it's a regulated process. These banks have to answer to investors. So the price that they initially come out with is usually they try to be as firm as possible, but it is negotiable. What's not usually negotiable is the as-is condition. Some of the banks will do repairs, some not. Usually by the time it comes on the market, whatever repairs that they will be doing is usually done. So the appraisal repairs, again, you're having to renegotiate that. We also have to support whatever is done at the time of negotiating the repairs, is we have to provide bids. So you really can't come to the table and say it's going to cost $10,000 to do something unless you have a bid to support it.
Thank you. We'll write questions down. We're going to probably just move through the panel. That'll leave more time for questions afterwards rather than interrupting and taking questions right now. Okay, so let's go to Attilio. Attilio, you're next, and get the mic there. And the question for you is, how do we process the offers that we receive on short sales? And how does your company Remax, or how should they be processed?
That's a great question. So, hey, we don't need rail. There's no traffic. I left at like 3 this morning. I came right in. No, but seriously, next time I come to this thing, I think I'm going to sleep in my car. Wake up the next morning with my travel toothbrush and come right into the meeting. But anyway, how we process our offers, it's real simple. We treat all offers in chronological order, irregardless of superiority. I'm done. Seriously, that's literally how we do it. There are many ways to skin a cat. Well, I'm sorry, there might be cat lovers in the room. There are many ways to do things. We're not saying that this is the best way, but after you've done something 200 times and you get screamed at and nasty emails and people running you off the road. No, I'm just kidding. A short sale is just not a happy situation for any of the people involved, including us. That's why I have a good sense of humor. And so basically we found this to be the fair process. We don't create bidding wars. We don't send all the offers into the bank. There's a big confusion that you think the bank is the one. They're getting us the approval of the short sale, but my client is still the titled owner, and I'm still operating in the best interest of my client. So I send the first offer in. Now you're saying, well, what if my offer comes in and it's $20,000 higher? Why wouldn't you want to send that in? We did that one time, and the bank and the appraisal didn't come in. So we basically shot ourselves in the foot. I'd rather come back to that second buyer and say, guess what, we got an approval, but it's less than what you offered. Would you like to change your offer, or you just want to come in at that price point? Because from the seller's standpoint, do they care what it closes at? No. All they care about is, I don't want a promissory note, I don't want to have to come to the table with cash, I don't want to have to, basically, I don't want to bring my checkbook to escrow because there's a whole bunch of turmoil going on in my life, and I just want to get this monkey off of my back, which is this upside down home, and they may also be distressed, which means they got a possible auction date coming up. So we find that that's the most fair way to treat all offers in chronological order, irregardless of superiority. We send the first offer into the bank. Once we get the approval back, we go down the line to see who's still standing. Because buyer agents will tell me all the time, this buyer is hot and heavy and they're good to go and they're gonna buy this place. well, is that going to be true 9 months from now? Life happens. They might get hit by a bus. Okay? So, yeah, and I've had buyers, no, they weren't hit by a bus. But I've had buyers pass away. To be honest with you, I've had sellers pass away. So life happens, and in a normal transaction, even in an REO, it's like real quick. Less probability of something getting messed up. It's a complicated situation already. Again, all offers are treated in chronological order, irregardless of superiority. Thank you.
Thanks, Attilio. All right, the next question for Tony Diaz from VA Mortgage Center for Hawaii. Tony, what are the loan limits and how many times can someone use their entitlement?
First, let's talk about the entitlement thing. The VA home loan benefit, or the VA home loan, is not just a loan product. It is an entitlement that someone has earned for the sacrifice they have put by putting themselves in potential harm's way. Not only their sacrifice, but their family's sacrifice. So as an industry, we should be doing a better job of helping our men and women who have fought for the freedom for us to be able to sell real estate that we don't even own and make a commission doing it. In some countries, you can go to jail for that and or be hung. So it's an entitlement. The loan limit here in Honolulu County today is $695,750. That's the max 100% financing with the VA funding fee. However, there is what's called the VA jumbo loan. You can go above $695,750, and the veteran buyer just needs to put 25% down on the difference over $695,750. It is by far the cheapest jumbo loan on the planet. For instance, if your buyer wants to buy an $895,750 home, there's a $200,000 gap, they only have to put down $50,000, which represents 6.75% of a down payment. Does anybody know of another product that allows you to put 6.75% down on a jumbo loan without mortgage insurance? No. It is by far the best loan out there for the jumbo. How many times can somebody use the benefit? Well, they can use it over and over again as long as they, number one, buy their home, sell their home, they get their entitlement back. Number two, they can buy their home, keep it long enough where they build enough equity up, refinance it to a conventional loan, and on a one-time option, we can get their certificate reinstated in full. Later on, they can buy a home with 100% financing with their VA benefit and count 75% of the rental income immediately off of the property they're leaving. And the third one, the one that people don't know too much about, is if you have a client that moved here from North Carolina and bought a house for $100,000, they think, I've used my benefit, I'm done. That's not true. You've only used $100,000 of it. If the loan limit here in Honolulu County is $695,750, they still have $595,750 left over, and they can put 25% down on the balance over that. So the VA benefit has changed drastically over the years.